Hello friends, welcome back to IWJ or Invest with Jerry. Today we are going to talk about the best stock picks for April of 2021 and why they are being selected. Since the market has gone through some level of pullback, it might be a very good time to invest into solid companies with solid fundamentals, but which are on discounts compared to last few months or last few weeks. So without much delay, let's jump to the best stock picks for April. Yay! I'm going to give you 11 diversified stocks over 2 videos to consider for your portfolio. The first video will contain 3 5G or semiconductor plays and 3 recovery plays. The second video will contain 2 hyper growth stocks, 2 recovery plays, and 1 speculative or very high risk play. So let's jump to the first stock from 5G or semiconductor play. So the stock ticker is TSM. So TSM is actually Taiwan Semiconductor Devices. So it's headquartered in Taiwan. This is something to note. This is the world's most valuable semiconductor company and the world's largest dedicated pure play semiconductor foundry for integrated circuits. So this is a company which actually creates or manufactures the integrated circuits. So it does a lot of contracts for a lot of other companies. So you can see which all companies work very closely with TSMC. So many of these companies which are listed here actually gets their integrated circuits or chips directly from TSMC, as they have a lot of contracts signed. So some of the companies mentioned here are AMD, Apple, Broadcom, Marvell, MediaTek, Nvidia, Qualcomm. So this is like a huge client base. So this is the biggest company in the world to create manufacture chips. So this is a long running company. You can see it started in 1987 and it's a well established company and it's a powerful company. If you believe in all this 5G digitalization, work from home, data centers, cloud computing, artificial intelligence, augmented reality, virtual reality, animation, VFX, it's all actually connected back to TSM. Price of the company is $116 US. The market cap is $536 billion US. So this is a very big market cap company. And I have seen the revenue growth is actually 13.3%. So 13.3% is a very high revenue growth for a very big company. Earnings growth is at 12.3. And then asset to debt is like, it's really good. The valuation is overvalued. But this is actually specific to one site which I am checking. So this can be ignored. So I have not put any points for that. The insider percentage is 0.4. The profit percentage is 38%. So they are actually making around $40 for every $100 deployed into their manufacturing facility. So this is huge. The price to sales ratio is actually at 12.9. This is kind of, it's not very cheap and it's not too expensive. But yeah, still it is considered to be on the expensive side. Basically, I have checked fair value from a couple of sites. One site says it's 50 and one site says it's 134. So it's all over the place. So this also we are going to ignore for now. The trailing PE is 33, forward PE is 30. These three are actually metrics which again will show if a company is overvalued, undervalued, or is it doing good. So just looking at some of the basics, the revenue growth is good, the balance sheet is good, profit percentage is really good. So that is something good. And also it gives a very good dividend. So again, let's just quickly go through the metrics of the, Taiwan Semiconductor, the revenue growth and all those things. So again, valuation wise, this looks a little bit expensive, but this changes from site to site. So you can ignore this. Future growth, you can see the future growth is at 13.3% and earnings growth is 12.3%. And compared to the industry, semiconductor industry, this is a really good, strong revenue growth. Again, you can see how the graph is going. It's going up only. So that's a real good indicator for us. Past performance also, if you see, it has been profitable at 30, 35, 36, and now it's coming to 38% profitability, which is really good. Financial debt is actually really good. It's covered. Dividend wise, 1.69 is actually a healthy dividend. And ownership, I have not seen much ownership. So if you can see, it's like at 0.4%. And also there is one other thing I would like to show you. So if you see the ownership, you can see big companies like BlackRock, the Vanguard Group, the JP Morgan Chase, Invesco, Fidelity, T. Rowe. So you can see there are like lot of big companies invested into Taiwan Semiconductors just because the company is in a booming sector as well as the company has done so well for so long. So this is a real strong company to consider for your portfolio. Now let's go to the next company, which is Nvidia. So Nvidia, I believe everyone has heard about Nvidia. So it's actually the inventor and the world leader in GPU. So graphic processing unit, if you have heard about it, these are the guys who has invented it. So let's see what and all they are touching. So they are actually into automobiles, so heavily used now for autonomous driving, laptops, Bitcoin mining, gaming, cloud, data center, AI, VR, machine learning, robotics. So I'm like heavily bullish on this one. So it operates on two segments, which is actually graphics and compute networking. So now let me take you to one of the Nvidia presentations for the investors. So I'll show you few things. So this is Nvidia Clara for healthcare. Nvidia has created a specific kind of processors and specific to industries. So basically for gene editing, lot of healthcare diagnosis and all those things, they have created something called Nvidia Clara, and this is doing really well. So you can see AstraZeneca, GlaxoSmithKline, Nanopore, and many other companies have already used Nvidia chips to do their own research. So coming to their core business, you can see gaming is 47% of their revenue. Data center is at 40%, professional visualization is at 6%, automotive is at 3%. I believe automotive is going to be a very big percentage for them because their electric vehicles are booming, as well as autonomous driving concepts are coming in, as well as like there are a lot of companies moving on to autonomous driving. So again, gaming is might be going to go down for a bit because since the coronavirus and all its lockdown is coming out and people are starting to travel more, this might come out. But once people gets into a habit, most probably they'll continue. So it's going to come down a bit, but again it's going to go up as per my understanding. Data center is going to boom even after all this boom which happened in the last year. That is because of the hybrid work from home, lot more data coming in, cloud computing and all that, AI, VR, robotics and all those things. Again, professional visualization is one area. It might be like stagnant or stable, but again if you think about like healthcare side and all those things, it might be good. So now let's go and see what and all are their growth drivers. So gaming, AI, augmented reality, virtual reality, and self-driving cars. So this is a sector which I'm very bullish. So if you look at Nvidia, I am bullish on so many sectors in which Nvidia is invested in. So all those things together looks like Nvidia is a very strong stock for to own for the future. So with all the cryptocurrency hype coming in, Nvidia is also a major player in cryptocurrency mining. So let's see what Nvidia has offered. So before that, let's see what mining is. So every time someone sends or receives an Ethereum token, a transaction occurs, and these transactions are processed in batches known as blocks. So in basic English, mining is kind of a transaction, and there's like a lot of coding involved in that and a lot of equations to solve. So they need really powerful CPUs, GPUs and computers to discover the cryptographic hash. So there's a hash algorithm which needs real powerful computers, GPUs or CPUs or processing units. Nvidia has come up with a new product which is called by the name cryptocurrency mining processor. So it's a processor which is solely allocated for cryptocurrency mining. This is a real good move from Nvidia to capture the cryptocurrency mining market. So let's quickly go through some of the fundamentals of Nvidia. So valuation wise, you can see this side says it's overvalued, but that is okay. You can ignore this. Future growth is at 14% compared to semiconductor industry of 8. So it's like almost 150% plus revenue growth compared to the industry peers. Earnings growth also is better than industry average. So that shows something that the company is comparatively better than other peers. Past performance, you can see again, this is a high revenue and a high profit earner. You can see the profit percentage was at 37% at some point, and then it's back to 26% now, but still doing really good. Financial health, if you see, Nvidia has a lot of cash in hand and less debt compared to cash. Dividend wise, it is a very small dividend yield because it's a growing company. You do not expect a lot of dividend to be supplied to the stockholders. Ownership, Nvidia has around 4.1 percentage of individual insiders. And again, if you see the insiders, you can see Vanguard, BlackRock, State Street, T. Rowe, Northern Trust, BNY Mellon. So there is like all big companies have put a lot of money into Nvidia because they are all bullish on Nvidia. And let's go to some details from Yahoo. So you can see the sales growth for this current quarter 77%. So revenue is to grow 77%. That is what is expected out of Nvidia for this particular quarter. Next quarter is not there, but current year it's 35%. So these shows the bullishness with Nvidia. The third company today is Skyworks Solutions. So they actually designs, develops, manufacture semiconductor and semiconductor products for use in radio frequency and mobile communication systems. So this is another big 5G player. So this company provides its products for use in aerospace, automotive, broadband, cellular infrastructure, connected home, wearables, medical, military, smartphone, and a lot of other things. So let's just go through one of the things which I have found in their investor presentations. So they say our strategic path. So they have mobile connected systems, which is tablets, smartphones, mobile office, the Internet of Systems, which is broadband homes, smart homes, infotainment, virtual assistants. You can see all these Alexas, Google Mini, and everything. Streaming video, medical, wearables, connected home, and emerging markets, artificial intelligence, machine learning, emergency services, factory robotics, and so many things. So this is a market which is moving forward with 5G and the improved internet connectivity. A lot of things have accelerated due to coronavirus pandemic, and which is going to go forward. It's not going to look back. And some of the customers for Skyworks Solution, you can see Nokia, Rockwell, Philips, Siemens, LG, Hyundai, Toyota, Tesla, Ford, Volkswagen, Nest, Audi, Amazon, Sonos, Ericsson, Honeywell, Microsoft, GM. So basically it's big clients. So this itself shows the importance of this industry and the importance of the role which Skyworks Solution plays in connected systems, Internet of Things, autonomous driving, 5G, and all those things. So the price of the stock is at 182. The market cap is 30 billion. The revenue growth for 3 years, next 3 years is 7. So you can see it's relatively less compared to the other two picks. Earnings growth is 10, which is okay. Asset to debt is no debt. So this is huge. There is absolutely no debt in the company balance sheet. Valuation, it's a undervalued. And that is another thing to look at. I have seen both the sites. It says the fair value is 229. Remember the stock price is at 182 now and 201 for other side. So both the sides are bullish on this stock. The insider percentage is 0.3, that is small. Profit percentage is 27, which is really good, and it's a growing company. It's a small company as well. The trading PE is 27.6, 19.2 is a forward PE. All these three metrics show this company is kind of undervalued compared to the other stocks which you have taken today. So undervaluation is sometimes good and sometimes bad. So let's see why this is undervalued. You can see the revenue growth is at 7%. When for Nvidia it was at close to 14%. And the profit percentage is 27 when the profit percentage for TSM was at 38%. So that is a difference, and it provides a good decent dividend. So that is all with Skyworks Solutions. So I have created a scoring system, and this scoring system is just to measure the performance of companies in the same sector. Basically, if you select semiconductor devices, we can compare TSM versus Nvidia versus Skyworks and see which one is a better pick for us. So the major factors I look into is revenue growth, earnings growth, asset to debt, and profit percentage. All these four things have a maximum weightage of 3. And insiders, price to trailing 12-month sales, and forward PE, I have less weightage for those. And I have some other points for dividend, stable company, booming sector, and US company. So let's compare the scorecard for all these 3 stocks together. So the revenue growth compared to 3 companies is best for Nvidia. It's a 2. It's similar for TSM, so that is also a 2. Earnings growth is similar for all 3 companies. It's a 2 for all 3. The revenue growth for Skyworks is a bit less compared to other 2, so it's at 1. Asset to debt is really good for both these companies, but there is absolutely no debt for Skyworks, so that is a 3 for me. The points for insider percentage is at 0, the maximum being 2. Both these companies, TSM and Skyworks gets a 0, and Nvidia gets a 0.5. The profit percentage, you can see Nvidia is heavily profitable, so that is really good, and I given a 3 for that. And other 2 companies score 2. Price to sales is at 0 and 1 and minus 0.5. So minus 0.5 is when it is it's close to 20. So I gave a minus 0.5 just to show that this is a bit overvalued. And for Skyworks is at 1, which means it's decent. And then the forward PE is 0, 1 and 0.5. So again, this shows valuation. So that is okay. So now let's see the TSM is a very stable company, long running company. It's in booming sector, 5G and semiconductors, and it's not a US company. So there's a point which it has lost because it's not a US company, and there is so many problems with China, and they have reduced 1 point for not being a US company. And it's the best dividend out of all these three companies, so I given a +1. So total score is 11 out of 20. So now let's go to Nvidia. So Nvidia has a total score of 10.5 out of 20, and because this is a US company, booming sector, stable company, but I didn't give a point for the dividend because it doesn't have a dividend. And Skyworks gets a total of 13 points, and this 13 points adds up because of the extra points it got because of the lower valuations. This scoring system is very tough, so any company above a scoring point of 6 I consider to be a really good company. And from a revenue growth standpoint, Nvidia is the best. Profit percentage standpoint, TSM is the best, and Skyworks is like valuation based, it's the best. So these three companies actually are very good companies related to your 5G or semiconductor play. So our next three companies are from aerospace. So basically, first company is Southwest Airways, second one is Delta Airlines, third one is United Airlines, and let's see what and all they do. So one thing to understand is like the company which has most number of domestic flights will be the winner for the short term, and the companies with most number of international flights will be a winner for the long term. So it seems like Delta Airlines has some issues. It has connections or hubs basically in Amsterdam, London, Heathrow, Mexico City, Paris. So all these red marks shows that international travel is not yet full-fledged. So that is something to be waited on. And also Delta is a major player for business travel, which has actually come down a lot in this after this coronavirus has happened. On the other hand, if you take Southwest, it has lot of flights to Miami and Florida, and a lot of people are actually looking forward to travel to Miami, Florida, and other domestic locations. But anyways, let's come to UAL. So United Airlines have a lot of international hubs. So it's in Latin America, Middle East, Pacific, Africa, Asia, Europe. But all these three carriers have a lower price compared to where they were before pandemic. So we do not have to go in depth to these companies because we know what they do. We just go through the fundamentals. So the price of LUV is at 61.2 today, market cap of 36. Revenue growth looks good for next 3 years is 25, and earnings growth is also really good, 79. Asset to debt is kind of decent. It's considered undervalued in both the sides. And insider percentage is very less, profit percentage is not there because and then price to sales ratio is 3.6. This is for airline industry, this is kind of okay. It's not very expensive, but it's not very cheap as well. The fair value is 121 and 61 for two sides. The trailing PE is, you can actually ignore this trailing and forward PE. But one thing to note is like the companies were actually profitable in the past, and the profit percentage was at 16% for LUV. So this is a well-run airlines, and if it comes back to its full-fledged operations, it can actually produce a decent amount of profits. Now coming to Delta Airlines, the price is at 47, the market cap is 30, revenue growth is at 25, earnings growth is 98. Asset to debt is fair. So I have seen that asset to debt is actually, we do not have so much of cash in hand to cover all the debt. So it's kind of a okay position, but not a very comfortable position. Again, this is considered to be undervalued. Insider percentage is less. Price to sales is at 1.7. I would explain why this valuation is less for Delta. Then fair value is 56 and 50 in two different sides. So it shows like it's kind of just undervalued, not too much undervalued as compared to LUV. And the profit percentage was around 10 when it was doing good in like before coronavirus. So just remember the profit percentage of LUV was at 16, Delta was at 10. And now coming to UAL, as we already spoke, it is affected by international travel a lot. So it has a bad balance sheet. It has a lot of debt. So it's a market cap 18. And the price is at 56. Earnings growth is 26, and revenue growth is 26, and earnings growth is at 95. It's considered overvalued in most of the sites I've seen. You can see it's at 40 and 54 for both the sites. And then it was when it was profitable, it was having a profit percentage of 7. So basically, you see the profit percentage of LUV was at 16, profit percentage of UAL is at 7. And profit percentage of Delta is at 10. So I would say LUV is the best play here. Delta is a decent play, and UAL is like a risky play, and maybe for a long term one, UAL is a good play. So one way to look at this is like if you had put $100 into LUV can actually produce $16 out of your $100, whereas Delta will produce 10 and UAL will produce $7. So basically LUV produce double the profit which you will get out of UAL. And JETS is a airline ETF, which is a very important ETF if you are not planning to put money into like different specific airlines and you're overall bullish on the sector. So let's see a comparison chart of all these four picks. So this chart shows the 2-year comparison of Delta, LUV, United Airlines and the ETF JETS. So JETS is a small blue line, and you can see how these airlines have dropped down. So Delta was at 62, LUV was at 55 and United was at 89 before the pandemic. Only Southwest has come up reasonably, but still yet not to its peak. Delta and UAL is at it's below. You can see the chart also holds good for the discussion which we had. UAL is at the bottom, LUV is at top, and DAL is at 49. And if you want to just play the JETS ETF, you can see JETS ETF was at $31 before the pandemic, and now it is at $26. So it has still upside potential. So if you don't plan to put money into any specific airlines, then JETS is a very good play.